Hello there everyone, today's video is all about R&D. Now specifically I'd like to tell you about a recent court case where a particular point of the law was tested in the R&D rules. Now it was all about the part of the law that says explicitly when R&D relief cannot apply. So quick recap, R&D relief, very powerful tax relief for SMEs and larger companies. It only applies to companies that are coming up with innovative ways of doing something. So overcoming a technical uncertainty, further the advancement of science and technology, expenditure that they incur, those companies, they get super deductions. So the HMRC, the government say, look, we're going to assume you've spent more than you have, and you get this enhanced deduction, which reduces the corporation tax bill. Now, specifically, this court case tested the point on what we call subsidized income. So the rules say in the R&D tax relief, what the law says is this. It says there is an exemption from claiming R&D tax relief on subsidized expenditure. So normally you've got expenditure, you claim R&D tax relief if it qualifies, but if that expenditure was somehow subsidized, so someone gave you money towards incurring that expenditure, then you can't claim the enhanced tax relief under the R&D rules. Okay, that kind of makes sense. That's kind of like saying, well, you're getting your cake and eat it too much, because you haven't really incurred the economic outlay of the wage bill or whatever it was to get the expense in the first place. You haven't really taken a risk because someone has given you the money. It's been subsidized. So what's your risk? Why should you get super deduction and get extra tax relief? So that kind of makes sense. But taking a deep dive into the rules, what is subsidized expenditure? Well, the first thing is state aid. So that's all about government assistance. Second one, grant or subsidy other than state aid. So again, it's grants from the local council or government grants. If that is given to you to undertake R&D activities, you can't get this super deduction, as it were, that you can't get the enhanced relief for R&D. Yes, you get the deduction on what you've expensed as a tax relief, and you pay tax on the revenue, on the subsidized income, but the two would net each other off. You can't then get further enhanced relief. But the third bullet point in the actual law says that subsidized expenditure also is met directly or indirectly by a third party. So expenditure met directly or indirectly by a third party, that counts as subsidized expenditure, and that negates claiming R&D. Now the whole crux of this court case hinged on this third bullet point, the third strand of the definition of subsidized expenditure. And basically what it was a property developer. Now this business did up old stately homes, heritage property in the UK for the owners of those homes. So the owners of these old historic homes which were falling apart hired, paid, contracted with this company to fix their properties from not falling down. So this property company specialized in coming up with ways, unique, innovative ways, to basically keep the joists and the beams up that are 500 years old and crumbling down. And what they did, the company, the taxpayer company in question, they would cost the job. So they'd say, right, well, we're going to assume that it costs 50 grand for the materials, 100 grand for the labor, and we know that's going to cost us some R&D expenditure. We will incur certain amounts of R&D because we have to come up with innovative ways to basically keep this house up. Whether that be injecting silicon in the cavity walls or goodness knows what. But they came up with all this kind of clever ways to basically do their job. And then they'd cost all that out, they'd add on a markup, and they'd go to the client and say, here's your final quote for doing the job, for restoring your stately home. Here's what it's going to cost you. And the client would say, fine, go away and make it happen. So But basically that fee from the client, HMRC argued under strand number 3 of the subsidised expenditure. They said, well, hang on a minute, the client is really subsidising you to come up with R&D, to pay, it's paying for your R&D. And the taxpayer's like, excuse me? No, it's not. We're paying for our R&D. Yes, we're factoring it into our pricing from a commercial element in terms of how much we mark up and charge the client. But the client is not directly or indirectly subsidizing us. We're just factoring in the cost in our commercial markup for the price that we give to the client. And this thing went to court, and it went to the first tier tribunal. Now, the judge sided with the taxpayer and not with HMRC. Because if you think about it, if you run HMRC's argument to its natural conclusion, every business that is undertaking R&D successfully, because remember, you don't have to be a success in R&D to claim the relief. Not everything works out, but assuming all those that do work out, you're then going on to get commercial exploitation of the R&D that you undertook on designing the new widget or whatever it is, but you're going to get money in, as a result of your R&D activities. So HMRC's argument was basically saying that every single business that gets money in, from the exploitation of R&D, it's going to be treated as subsidized expenditure, which is just, which is crazy, really. And thankfully, like I said, the judge said, no, it's not what it is. The company, basically, the taxpayer company, undertook their R&D. The end user, the end client, the customer who paid for the maintenance of their stately home had no idea how the taxpayer came up with what they did. They just said, look, here's my property, I don't want it to fall down. Yes, here's a couple of $100,000 and make this thing stay up for the next 10 years or whatever. They didn't know the ins and outs of how the taxpayer company went about doing all their clever stuff, the R&D that had to be undertook to get it into a state of not falling down. The client was unaware of that. All they cared about was having a building that stayed up. The taxpayer, the company here that went to court, they were doing all this stuff behind the scenes. So they argued, look, there's no way that the end client is paying for us to do R&D. Yes, they're paying for us to do a job, but it's all part of our sell to them, and our sales invoice is a figure, and we've factored in the costs to get to our margin, and the costs include some R&D. So thankfully the taxpayer won on that, because like I said, the natural extension of HMRC's argument would pretty much mean that every business would be denied R&D relief, because you're going to get some money from a client when you exploit the technology that you've come up with, that you've done the R&D for, when you sell it, whatever it is that you're selling. So, but interestingly though, on the sort of the aftermath of the court decision, HMRC decided not to challenge it, and so it's, as far as we're aware, it's not going to go to the upper tribunal. Now, the upper tribunal sets binding precedents in law. First tier tribunal doesn't. So in terms first tier tribunal, this court case, whilst it's persuasive, each subsequent case heard by HMRC will turn on its merits until there is a binding precedent at the upper tribunal. Maybe HMRC thought, well, if it goes to upper tribunal, they would lose that and then it would be binding. So they're probably thinking, well, look, we'll just wait for another one to come along, and hopefully we'll get a better judge at the first tier tribunal on a very similar case who will vote, who will decide in our favour, rather than on this particular case where it was decided in the taxpayer's favour. So no real closure there, as it were, other than we do have now this tax case which points in the right direction as far as the taxpayer is concerned on this testing of limb number 3 of the subsidized expenditure law, but it's only the first tier tribunal. It's not binding precedent that a upper tribunal decision would be. So watch this space. But just an interesting video there on R&D, and because a lot of the R&D kickback, if you will, from HMRC where they deny relief for R&D is principally around the activity. The activity itself, what are you doing to overcome a technical uncertainty? Is it clever enough? Is it scientific enough, or is it too generic? And often be too generic. It'd not be deemed to be of any scientific or technological advancements. And that's what HMRC normally would kick back. This is a rare situation where they've actually taken this point on the subsidised expenditure to court. But nevertheless, like I said, victory for the taxpayer. Let's see what happens in subsequent cases, because, like I said, the natural extension would be that every commercial exploitation of R&D would lead to it being subsidised in some way if you follow their argument that was put in this case. So, if you like this video, please do subscribe, and I'll see you soon.